Welcome to the Utah Homebuyers Quest podcast with Nelson Bars. Our mission is to give you hope, knowledge, and encouragement on your quest for home ownership.
Housing affordability is at its worst point since 1986.
Higher mortgage rates are impacting Utah's housing market. Potential buyers out there being priced out.
It's getting tougher by the day to afford a home.
Many factors are making it very, very difficult with no relief in sight.
Homeownership may seem like an impossible mountain to climb in today's world. We're here to say that it is possible, and we're here to be your guide, to climb with you, to urge you forward all the way to the closing table. We believe in home ownership, and we believe in you.
Well, hello again, home buyers, and welcome back to another episode of the Homebuyers Quest podcast. I'm Nelson. I'm excited to be with you again. I'm a mortgage broker, and I've been helping people buy homes for 25 years almost, and I'm here to help you. And today we're going to talk about down payment. This is a presentation that I've been teaching to real estate agents for years as a continuing education class for them. And you're fortunate because you're going to get it hopefully condensed into 15 or 20 minutes, what usually we hash out for 2 hours of continuing education credits. So let's dive in. What I want to do is we're going to break this into 3 segments. So part 1, we're going to talk about the old-fashioned way of coming up with a down payment. Not just saving, but other places where you might not realize you have assets, you have equity, you have things that you can tap into to help you get a down payment. And that might be more attractive than finding it through a mortgage program like a zero-down program. So part 2 is where you borrow the down payment as part of your mortgage. We'll talk about Utah housing. We'll talk about some other programs that are similar. We'll talk about 100% financing. The other part 3, is going to be down payment assistance programs, where we'll dive into cities and counties and how they work and what they offer. And so we're going to go over 25. It's meant to be kind of a brainstorming session. I've had clients in the past who didn't think they had a down payment, and I would send them a copy of the slideshow from this presentation, and I would say, look, just scan through it, see if any of these things trigger your mind. That's what I want to do today. I want to scan through it, and we're going to touch on 25 different ways you could come up with a down payment. And hopefully it helps you realize that you can move forward sooner than you thought. Down payment is always required, whether you're going to borrow it, whether you're going to get a gift from someone, whether you're going to save it up. Even the 100% financing programs involve borrowing that down payment almost separately as a separate loan most of the time. So we're gonna look at the most affordable way too, because one thing I would like to point out is that the down payment assistance doesn't really help you with the affordability problem. If your main problem with buying a home, if your main objection, the main concern is the monthly payment, doing less down payment or finding someone else to lend it to you usually means monthly payment goes up. So they're kind of diametrically opposed. If you want a better payment, then probably down payment assistance makes that harder to get. And we'll talk about why. Okay, 25 down payment sources. Let's go. Number 1, the old-fashioned way, just save it up. Save up your money. Now, you've got some guidelines you want to be aware of. If you have money in savings, the underwriter is going to ask for 2 months of bank statements to prove that the money has been in your bank for that long. Or if there are large deposits, if you moved the money into your bank account, they're going to want to follow the source. They want to know where it came from. And the big concern here is that it didn't come from a credit card or any kind of unsecured loan, because they're going to give you a lot of benefit of the doubt for your down payment. They actually will take more risk on you because you're taking some risk by putting your own skin in the game. But if the down payment source doesn't truly reflect your skin in the game, then they're going to be giving you more credit than they should in the risk assessment. So just know that down payment needs to be in your bank account for 2 months, or if it comes into your bank account during those 2 months, you've got to document where it came from, and the source has to be one of these acceptable sources that we're going to go over today. Okay. Number 2, income tax refunds. If you, most home buyers start looking in the spring, and many of them use their tax return as a source for down payment, and it's definitely an acceptable source. Number 3, sweat equity. If you've heard of this phrase, it's not a new phrase. It's been happening for a long time. It just means you can do some work on the home prior to owning it. Used to be more common in construction, but a lot of builders don't allow this because of liability and because it slows them down. But you can still do it on a property if you have a builder who's willing to let you do some of the work. Then you can have a dollar-for-dollar credit as down payment for any labor you've done. It's more common if you're buying a home that you've lived in for a while. So if you're a renter in a home that you end up buying, you can get credit for work you've done on the home. The challenge is the documentation. It really needs to be written into the contract before you do the work. So if you have a lease option contract, a lot of times you'll rent a home with an option to purchase in the future, and that's why you would work on the home and do so much there. So if that's something you want to do, if that's something you're working on, then call me, because I want to go over all of the guidelines and make sure we do the paperwork right, so that in the end, when we do your mortgage, you get credit for down payment for not only the work you've done, the hours that you've spent, but the money you may have spent on materials and supplies. So sweat equity is number 3. Number 4 is selling your personal assets. This one's super common. If you own something, you can sell it, and you can put that large deposit in your bank account, and that can be used as a down payment. Just keep in mind, you got to do a paper trail. You got to prove that you owned it. So vehicles are super common. If you're going to do a vehicle, you're going to have a copy of the registration that shows that you owned the vehicle, and a blue book value to show what it was worth, and then copy of the note, or the what do they call it, bill of sale between you and the buyer, and also a cashier's check. So there's definitely a paper trail to prove that that deposit came from one of your own assets. This is going to be a trend here. As we go over these sources, it's really acceptable to come up with your own money no matter where it came from. If it came from your own equity in a car or anything else that's yours, that's fine. If you're borrowing it, even if you're borrowing it against something secured, that's fine. The issue is when it's not your own money and you're basically pulling it out of thin air with some kind of an unsecured loan. So number 4, you could sell any of your personal assets. It doesn't have to be a vehicle. It could be an RV. It could be recreational merchandise. It could be assets that you own, like art or other properties. Any of that is acceptable. Okay, number 5, rent credit. Have you ever been told that if you rent this home for a while, we'll give you credit for the rent you paid as down payment on the new home? Sometimes that goes along with the lease option to buy type of scenario that I talked about a minute ago. But you got to be careful, because they don't allow you to count all the rent as down payment, only any rent that you have paid above and beyond the value of the rent, the average rent for that property, and it would need to be documented by the appraiser. So if you're in that situation where you are expecting to get rent credit and you're renting a home and expecting to buy in the future, I think we should talk sooner than later to make sure that it's happening in a way that the underwriters will allow to count as down payment. A lot of times what happens is you find out in the end that it wasn't done in a way that the underwriter will count, so the seller is just going to reduce the sales price a bit for you. And you would think that would help, but it doesn't remove the need for a down payment. Just because they took $10,000 off the sales price doesn't mean you now have a $10,000 down payment. It has to be documented separately as credit for rent you've paid above and beyond the market rent. Okay, number 6, commissions from the sale of a subject property. This would only be if you or your family member is the realtor in the transaction. So if a real estate agent does a transaction that they're buying this home, they can use their commission as the down payment for the home, or they can gift you their commission if they're your family member, if they're anyone who's allowed to give you a gift, and that would need to be close family. So that's one place where you could find it. If you have a family member who's a real estate agent, then you might want to talk to them about that. Or if you are a real estate agent and you would like to help your kids with this, give me a call, and we've done it quite a few times, and I can walk you through how it works. It's pretty simple. Number 7, penalty-free IRA withdrawal. There are people who started saving for retirement early but don't own a house. The IRS allows you to take up to $10,000 out of an IRA, penalty-free, not tax-free. You still got to pay the taxes because it never was usually taxed if it's a regular IRA. But they won't assess you the penalty if you're doing it up to $10,000 for your first home. So that's a great option. I have a friend who's a financial planner. We'll probably have him on the podcast soon, talking about he really believes homeownership is the first step towards retirement planning. And if he has a client who comes to him who doesn't have a home and they want to save for retirement, he'll usually encourage them to get a home first and then start saving for retirement. So if you're in that boat and you have some retirement money but not a home, I would encourage you to listen to episode 1, Boot Camp 1, where I talk about why I believe homeownership is so essential. And let's look at ways to tap into the retirement fund to basically transfer that money into home equity, which can actually grow much faster than how it's growing in your retirement fund. So number 7, a penalty-free IRA withdrawal. Now, number 8 is land equity. This won't apply to everyone, but I've had quite a few clients who already own the land that they want to build on. Oftentimes it was gifted to them by a family member or they inherited it, and it's sitting there. That will count as your down payment for the construction loan. We can have that wrapped into the full appraised value of the project, and as long as that is at least 20% of the value of everything you're doing, then you won't need to come up with more money for down payment on your loan. Number 8 is it's kind of an ancillary topic. Get the closing costs out of the way. You may not be aware of this. You may be thinking, well, not only do I have to come up with a down payment, but I got to come up with another 2 to 3% of the purchase price for closing costs. I just want you to know that it's pretty common in this market to have the seller pay the closing costs for a first-time home buyer. Now, when I was a first-time home buyer and someone told me that, I did not believe them. I thought that why would a seller pay my fees for me? And the answer is because they are the ones who are standing to make money and walk away with a chunk of cash after closing. And in order for them to attract more buyers, oftentimes they will understand and accept that they're going to roll that into their sales price. It's the only way you can actually roll it into the loan, right? You can't just go put a house under contract and then come to me and then we add it into the loan, unless you're doing a Utah housing loan. That's the one time where we can finance closing costs into your loan. But if you roll it into the purchase contract, which a good real estate agent can help you negotiate, then it's also automatically rolled into your loan and you don't have to come up with that cash out of pocket. Now, also be aware, there's a limit on how much you can get for closing costs. Most of the loan guidelines are going to cap it at 3%, but your closing costs should be under 3%. There are times when they allow you to take up to 6% of the purchase price or even 9% of the purchase price for closing costs, and that could be very useful if you want to use any of these seller concessions, that's what we call it, to do any repair work on the home. Carpet, paint, things like that can also be paid for by the seller or rolled into the purchase price. They can't be rolled into the loan. If you want to do that, talk to me, because we've got to make sure the contract is worded correctly. But don't hold yourself out because you don't have closing cost money. That is even easier to get out of the way than down payment money. And today we're talking about all the different ways we can come up with down payment money to help you as well. Okay, number 10. This is part 2. We're going to start talking about borrowing money. Now, the problem, like I said, with borrowing money is that it does not equate to affordability. If you're watching this one on a video platform like YouTube, you could see a sample of the spreadsheet that I usually put together for my clients. When they buy a home, we'll sit down and we'll put in columns different loan options. So here's what your house payment would look like if you put 3% down. Here's what it would look like if you put 0 down. Here's what it looks like if you use, Utah housing compared to Genoa, for example, or if you get a grant from a city or county. All these columns are together. That's really the only way I know of to help advise you on which loan program and which interest rate to choose as we lock in your loan. So down payment assistance, the borrowed sources, are almost always going to result in higher monthly payments. Okay, so let's get into this. So number 10, probably the most common source that I've seen for first-time home buyers to get their down payment funded is Utah housing. Utah housing is a zero-down program. It's a great program. It's been around for a long time, since 1975. Even my mother-in-law and father-in-law used Utah housing to buy their first home 50 years ago almost. So what they do is they lend you the down payment as a second mortgage. So you'll close 2 loans simultaneously on closing day. The first one is your typical FHA or conventional loan that requires 3 to 3.5% down. And then the second mortgage comes with an interest rate that's 1 point higher than the rate you got on your first mortgage. It comes with a separate monthly payment, and you can actually finance more than 100% of the purchase price with this program. So you can roll in some of the closing costs. You typically need still to have the seller pay a little bit or come up with a little bit yourself, but it makes it actually really smooth and quick. This program, out of all of the down payment assistance programs, it's the one that works smoothly because they don't have crazy guidelines. They don't have crazy income limits. They haven't run out of money. A lot of the programs we're going to talk about later, they just constantly run out of money, right? Utah Housing is kind of the old reliable down payment assistance program, and I have helped probably 100 clients buy their home with a Utah Housing loan, and I don't know of any of them who are sad they did it. Usually what happens is you keep that loan for just a couple of years until your home appreciates enough that you no longer need 100% financing, and then you're eligible to put that into a conventional mortgage, refinance that, and lower your payment significantly. So Utah Housing is a great one. It's made it possible for so many people to buy a home. I will go over some of the other things. Utah Housing has a minimum credit score of 620. They have a better program if you can get over 660. It's not only for first-time home buyers. They have a program called Home Again. Well, I don't know if they changed the name of it. I think it's just their typical FHA VA program where you don't have to be a first-time home buyer to use it. And they also have a conventional program that you can use as well. So the rates for Utah Housing are always published on their website. It's utahhousingcorp.org. And we are able to process and originate those and help you get the same interest rate and closing costs you would get with any lender when you go through with Utah Housing. So I'd love to help you with that. Okay, number 11, other lender-funded down payment programs. So there are similar concepts to the Utah Housing program. One is called Chenoa, one is called the National Homebuyer Fund. And in some ways they're better and in some ways they're worse. I think on paper these can be better because instead of you making a monthly payment on that down payment assistance loan, it just sits there. You still have to pay it back in some cases, but not all cases. So the Chenoa program at least, and then I believe the National Homebuyer Fund as well, offers to forgive the down payment assistance loan after 3 years of on-time payments. I think that's amazing. Oftentimes these down payment assistance loans are over $20,000. And so even if you have to take a slightly higher interest rate to go with one of these forgivable programs, it can be $20,000 better in the long run because that loan is forgiven. Now, it's not always forgiven. If you miss a payment or if you want to refinance before the 3-year mark, you have to pay it off. And it kind of creates this conundrum where, okay, rates are getting better. I kind of want to refinance and lower my payment, but if I hold this one for another year and a half, they're going to wipe away $20,000 worth of debt. So we'll have that conversation. We can weigh the pros and cons when it comes time. But I always like to compare the Chenoa program and the National Homebuyer Fund to the Utah Housing program. They're very similar, slightly different, and you'll be able to decide which program you want to use. Okay, number 12, the USDA Rural Development Loan Program is a 100% loan, all wrapped into one mortgage. So you're not doing a first and second. The trick here is that it's only available in rural areas. So in Utah, you have to go north of Willard, so up there in Brigham City area. Most of Cache Valley is eligible, but not Logan City because it's too populated. So they're only doing it in the underpopulated areas. To go south, if you go south of Spanish Fork, this program is available. And there's a map on their website. If you Google the USDA eligibility, you can pull up a map. You can type in the address of the area, the house that you're looking at buying, and it'll tell you if it's in their zone or not. Just to give you a few more geographic references, if you go west out towards Tooele and west of there, it is eligible. You are eligible to use this program in Tooele. And anything on the Wasatch back, so east up in the Morgan area, even in Huntsville and Eden area, this program works. So you can do, this is one of the best zero down programs because it doesn't come with a higher interest rate. You know, if you do Utah Housing, if you do Chenoa, if you do the National Homebuyer Fund, it's going to come with a higher interest rate than you could get if you just did a conventional loan. Well, that's not the case with USDA. USDA has excellent rates, especially if you use a broker, because our rates on government programs tend to be a lot less than the conventional programs because of the way we have to make sure we get compensated equally on every loan program. So I'd love to quote you some USDA loan rates and blow you away with how affordable they are. They do have forever mortgage insurance. So remember, we talked about FHA loans versus conventional. Really, FHA, USDA, VA, anything that's a government loan has forever monthly mortgage insurance. But it's small. It's actually quite affordable. And when you add that to the lower interest rate, it's actually a great deal. It's cheaper than, a conventional loan, sometimes with no mortgage insurance. Okay, now they do have some purchase price limits and debt to income ratio limits that come into play with USDA. So as with any of these programs, I just want to give you a taste of what's out there, but I'll say again, call me, let's go through it. Let me look at your situation, and then I can point out which of these programs work for you, and you can decide which one you like. Okay, so I'll show you the map on the screen if you're watching on YouTube of what's available or where the program is not available. So if you see the yellow area, that is where it is not available. Okay, VA number 13. If you are a veteran of the military, you're going to be eligible for 0 down with no mortgage insurance monthly. It's a great program. To qualify, you need to have served active duty for at least 6 months and reservists for 6 years. So you probably know if you're eligible, but I've had quite a few people who think they're eligible and they're not. So you can call me. We can pull a certificate instantly. In most cases, it'll tell us if you're eligible. The downside with VA for some people is that you have to pay them a funding fee. It gets wrapped into your loan, and it can be quite high. I believe it's 2.3% right now for the first time you use the program. And then if you use it again, it's 3.3%. So it kind of doubles your closing costs. They allow it to be rolled in, but it's expensive in that way. However, whenever I've looked at this and the rates are so low that usually you save more in interest over the first 5 years than the fee that you gave to the VA. So we want to look at that closely, put together that spreadsheet and talk about the time frame. Now, the best part about VA, the best thing, if you are disabled in any way, if you have a 10% disability rating that's service connected, then you don't have to pay the VA funding fees, and then there's no downside to VA. It's 100% financing, 0 down, awesome interest rates, and no monthly mortgage insurance, and no upfront mortgage insurance because you have that waived due to the service-connected disability. So again, with VA, just like USDA, these government loans, we really shine on those with our interest rates, again, because we have to make sure we don't get paid more when we do a VA loan than we do on a conventional loan, and that just translates to better rates. Those guidelines, that law doesn't exist for the banks, the credit unions, and the mortgage banks. They do get paid more, I can tell you, on a government loan. And so working with a broker is essential, especially if you're considering any of these government programs. We can really save you some good money. Okay, number 14. Let's talk about some other places where you could borrow the money. So we talked earlier about you taking a withdrawal out of an IRA. Now I'm going to talk about you taking a loan out of a 401k. So IRAs don't have loan programs typically associated with them, but if you have a 401k, if you're working for an employer and you're still with that employer and the money's sitting in a 401k account, they typically have a loan option where you can borrow the money from yourself, pay it back to yourself over 5 years with interest, and then that is not taxable. There's no penalty involved, and that is an acceptable source for down payment. Even better, we don't have to count that monthly payment when you borrow that money when we do your debt to income ratio for qualifying. So a 401k loan can be awesome. Just give me a call if you want to talk about that, and you can mix and match that with other programs as well, other options that we're talking about. Number 15 is a life insurance cash value loan. Right? Same idea as a 401k loan. If you have a life insurance policy, if you followed the typical financial advisor's advice and got a good whole life policy when you were young, you may have a cash value associated with that account. Term policies don't have this, but if it's any kind of an investment associated life insurance account and you have a cash value, you could borrow against that without penalty and use it to purchase your first home. You may be able to also take up to $10,000, just like the IRA rule without tax penalty, but we would need to have you talk to a tax advisor for that one. So if you have a life insurance policy, we could look at that together. Number 16, same idea. Any asset, if you have stocks, bonds, if you've already been investing in mutual funds, then you can either borrow against that or withdraw the money to use as a down payment. And now number 17 is a big one, auto loans. I often have clients come to me who paid off their auto loan and now they're ready to buy a home, but they don't have a down payment. Well, did you know you can go and refinance the car, put a new loan on it, and then receive that cash? They'll put it in your bank account, and now you're making monthly payments on the car. Even if you don't have the car paid off, even if it's only half paid off, you can borrow that equity, put it in your bank account, and use it as an acceptable source for down payment. Yes, it will increase your monthly payment. Yes, we'll need to count that payment when we do your qualifying numbers. But again, the benefits of owning a home far outweigh the cost that it may be in interest to finance that car again. So great source, a great place for you to go get a down payment is any equity you may have in your cars. Other secured loans, number 18. So you can borrow your down payment from anything you want, anyone you want, as long as there is collateral tied to that loan. It's just the unsecured loans that we don't like. One place you could get it is from a family member. If you have a family member who doesn't want to do it as a gift, who wants to be paid back, then we can actually secure the loan against the house. We can have the title company do some paperwork, and that can be another source of secured loan. But if you have other vehicles, if you have art, if you have, fine jewelry or things like that you want to borrow against for your down payment, that is allowable. Okay, now section 3, we're going to start talking about gifts and grants and sources outside of your own family and your own assets. Well, actually, family is the first one. A lot of our buyers get a gift from a family member. And I think a lot of family members in older generations, they recognize the value of home ownership, especially starting young. Like I said before, I think it's more important even than starting a retirement account when you're young, is to get a home and let that grow simultaneous to your retirement savings. So if you have a family member, a parent, an aunt, an uncle, a grandparent who wants to gift you money to help you buy a home, that's definitely allowed, and we can work you through the paperwork on that. Number 20, a gift of equity. So I'm working with a client right now. I usually work with 3 or 4 people a year who are trying to buy a home from a family member, and the family member wants to give them a discount. It's usually a grandma or a grandpa who's selling the home to one of their grandchildren, and they don't want the full value for the home. Now, the trick here is that you need to make sure when you write the contract that you write it for the full appraised value of the home. So let's say the house is worth $400,000, but grandma is willing to give it to you for $3,000. Well, all we have to do is make sure the contract says $400,000, and then at the back of the contract you'll do a little addendum that says grandma is gifting $100,000 of equity to the buyer and doesn't expect to be repaid. Automatically that counts as your down payment. We can use that for closing costs. It removes mortgage insurance. It'll probably help you qualify for a much better mortgage than if you just wrote the contract for $300,000 and then still had to come up with a down payment. So if you're doing that, call me. We do it all the time. It's one of my favorite things to do. Number 21, pooled gift funds. They will accept a GoFundMe type of account, a wedding registry, anything that you may want to do. That maybe if you're getting married and you don't want a bunch of cheap things from Amazon, you could say, in lieu of a wedding registry, we've registered with Zion's Bank. Here's the account. This is our home buying fund. We'd love donations towards our home buying fund. You could have, you could use that. You have to show the list of who donated and how much they gave, but you don't need a bunch of gift letters from everyone. And I think that would be a really great idea for some people. Number 22, employer-assisted down payment programs. There are employers out there. We are one of them who offers their employees a down payment assistance grant. So we do $1,500. I think there are other employers that offer either reimbursing you your closing costs or actual down payment assistance programs. So that is allowed. You'll probably know about it if it's available to you, right? Number 23. Okay, let's talk about grant programs. You can get a grant from just about any government institution. So we're going to start. Let's talk about the national programs and the statewide programs first. There have been many here in Utah and in the U.S. over the last 25 years that I've been involved doing mortgages. Some have come from the IRS. There was once a time when the IRS was giving $8,000 to $10,000 tax credit to anyone who bought a home. So you get all that money back if you bought a first-time home. And in some cases you did or didn't have to pay that back. The state of Utah in the past has done grants to help builders both in times of high inventory and in times of low inventory. They've offered assistance through, usually through the Utah Housing Program, to get the grant. Right now, the state of Utah is offering a $20,000 down payment assistance program to anyone who buys a new home that's priced under $450,000. And the goal of that program is to spur on the construction of affordable housing for our first-time home buyers and our everyone who needs affordable housing. So that's a program that is ongoing. I'm recording this on April 17th, 2025. The program is still ongoing, has not run out of funds yet. It's intended to be a long-term program because all of those down payment assistance, I don't want to call them grants, they're loans. So everyone who's received that $20,000 has to pay it back when they sell their home. So it should be available on into the future. So there are other counties. Well, actually, I'm not going to get into counties until the next slide. But other state programs that are available, there's a $2,500 down payment assistance loan. Not a loan. This one's a true grant that's available for first-time home buyers who are veterans. If you have been in the military or out for less than 5 years, you're going to be eligible most likely to get $2,500 from the state. There's a $70,000 program from the state for anyone who has a disability. That's a really cool program, and it often runs out of money. They typically get refunded in the spring, and they run out towards the end of the summer. So if you're in that boat, even if you have a child in your family with a disability, call me and we can help you. We've arranged this for a number of clients who are able to get a $70,000 loan from the state of Utah. It does not come with a monthly payment. It just sits there and has to be paid back when you finish and sell the house or refinance. What it does is it allows us to really reduce your monthly payment, and it's really nice. Now, there's other lender programs that are available nationwide that we can talk about, but I want to move on to the counties. So number 24 is grant programs, down payment assistance programs from cities and counties. And again, I want to be careful with the word grant. That word is thrown around a lot, but very few of these are true grants. In fact, the only one that I've talked about today, or that's in this presentation that's a true grant, is the $2,500 Veterans Grant from the state of Utah. Everything else comes with a loan. Some of them come with a monthly payment. All of them have to be paid back at some point. A few of them can be forgiven under certain terms. So with the cities and counties, it really is, it's kind of there's a template they follow because they get their money from HUD for the most part. So one of the problems is they have to use HUD's income limits for these programs. So you have to make, I think if you're under $100,000 as a family, then we should look at these programs. If you have more kids, the income limit is closer to 100. If you don't have any kids, if there's only one or two people in the household, it's closer to like 87,000 for the income limit right now in 2025. These income limits go up every year as the average income in our area goes up every year. But I'll list off some of the counties that have down payment assistance programs right now that you could look into. And my favorite one is Davis County. Davis County has a $50,000 up to $50,000 down payment assistance program. And it's well designed because it's one of the few down payment assistance programs that actually makes your payment lower. And that's their whole goal, is to make sure to drive your payment down to where it's 35% of your income or less. In fact, if you're trying to do anything that would result in a monthly payment that's higher than 35% of your income, they won't approve it. And that's how they determine how much you can get. So Davis County is an awesome program. They have run out of money in their first year. They barely ran out, and I think they'll be replenished coming in like July of each year. So now's the time to get your ducks in a row and get pre-approved and get ready to apply for that program. It can really help, and it can be combined with the state program that has the $20,000, and I can help you do that too. Ogden City is the one that's been ongoing for a long time. They do a $10,000, up to $10,000 down payment assistance loan. Doesn't have an interest rate. It doesn't have a payment, but it does have to be paid back. Weber County, Salt Lake County, Utah County, even Bear River. There's a Bear River Associated Governments group up north where you have, I think, Cache Valley and Bear River, the Tremont area. They all have programs from the cities and counties. They all get funded once a year through, I think it's HUD block grants, and they all have the same income limits. For the most part, they're going to give you $5,000 to $10,000, and that's going to help you with your down payment, help you with your closing costs, and you just pay it back when you sell. Now, the reason why, I was tempted to, I have a list. I have a list of all of the cities and counties that I'm aware of that offer down payment assistance, and it has phone numbers and it has email addresses. I used to just hand that to clients, and honestly, what would happen is that nobody would do anything with it, right? And so what we do now is more of a concierge service. That's a funny word. It's a French word. So some people will say concierge. I don't know how to pronounce it. I say concierge. But it's a concierge service for down payment assistance. And what that means is that we will do the work for you as much as we can. And that's an upfront process of pre-approving you and letting you know. Don't waste your time calling these 25 different cities and counties because you're over the income limit. Here are the ones that you qualify for. Here are the ones that are going to benefit you the most. That's what we do. That's what I do as a broker anyway when it comes to your mortgage. And so we've just added that to our service. It's a down payment assistance search and processing where we take care of the paperwork. We're not going to just send you off to arrange the down payment assistance with the county, which is what a lot of banks will do. Is like, yeah, if you can make it work and if you can make that money show up on closing day, then more power to you. Instead, we process it. We've already got your pay stubs, your W-2s, your loan data. We know everything about you. We'll package that up and submit it to the city or the county, and we'll work with them to clear any conditions they have and make sure that we line it up so that the money shows up on closing day for you. So if you would like that assistance, that's the way we do it. Rather than, I can hand you the list if you want, and I'd be happy to. Just call me or email me and I'll get it to you. But if you would like a higher level of service, then meet with me for a consultation and we'll go through all of the programs and talk about which ones work for you. Okay, and for the last slide, for the last option, I just want to point out number 25 is this open-ended future. There's no telling what program is going to be announced this year. The Davis County program just came out last year. It was very exciting. Who knows? I think a lot of counties are going to follow suit and come out with programs that are similar to what Davis County offered. The point of this is that we are going to be your resource for that. I take it very seriously to keep myself updated on what's going on in our market in terms of down payment assistance and also broadly mortgage programs and guidelines. My job is to understand the market and then to get to understand you and your goals and to sit down and pair you up with the best options that work for you. So if you're in this game, if you're hunting for a down payment, especially if down payment is the only thing that's holding you back, let's get together and get you over that hurdle. Let's get together and help you find your down payment, help you find a down payment assistance program or an asset or another way to fund it, to borrow it, so that you can get into a home and start having those amazing benefits of home ownership. As I've said before, it is so worth it. I want to help you do it. I'm here to be your guide and your champion, and I look forward to sitting down with you to pre-approve you and help you out. Okay, once again, thank you so much for listening. You've taken another step in your journey towards that great goal of home ownership. I'm glad you're here, and let's do it again soon.
Thank you for listening to the Utah Homebuyers Quest podcast with Nelson Bars, your place for a strong dose of inspiration and knowledge so you can stay on top of your quest for home ownership. If you have a question or comment for the show, we'd love to hear from you. Visit homebuyerSquest.com to record a voice memo or submit your question. You can also join our Facebook community to interact with experts and fellow travelers. Search Homebuyers Quest on Facebook to find the group and join the conversation. But with just a simple click to subscribe, we'll invite you back to the next episode. And remember, we believe in home ownership and we believe in you.